Hey, this is Sasha. Welcome to another episode here on Hungry for Returns, where I answer your trading and investing questions. Today we have a question from someone who's a bit younger, getting started in investing, and I'm going to share with you some thoughts and insights about what to do here. So let's take a listen. But before we do that, if you have a question you want answered on the show, maybe in more detail, then go ahead and write in at tradersfly.com, and you can go ahead and submit a question by voice, and you might be featured on the show. Anyways, thanks again. Let's get started.
Hi, Sasha. My name is Josh. As a person in my lower 20s with an equity well below the $25,000 needed to be a pattern day trader, which is my overall goal, is it smarter to invest long-term or to swing trade? Thanks.
All right, so kind of a simple question. So let's kind of answer this question. I'll give you some thoughts and insights. Okay, so you're basically, if I go ahead, just write some notes down. You're 20 years old, or you're early 20, call it 23 years old. You know, you might have, I don't know what your total amount is, maybe $15,000, could be $10,000. But your overall goal is to hit about $25,000 because you want to do the day trading. Okay, so one thing I would say is, there's one thing about this is, remember, this pattern day trader rule kind of limits you to a certain number of trades. And remember, that's on a per broker level, right? So if you have, let's say, 3 brokers, let's say you got broker number 1, broker number 2, broker number 3, each one of them, if you take $15,000 and I put 5,000 here, 5,000 there, 5,000 there, now I get more trades on each and every single one of them. So anyways, that's one thought to kind of get away from that and trade more often. But as far as the bigger picture is concerned, right, let's look at the bigger picture. Okay, so you're kind of in your, call it 23 years old, and let's say you got $15,000 in cash. So do you really go ahead and swing trade, or do you go ahead and long-term invest? Well, I look at it like this, where hey, if you're young, you're probably going to be making more money anyway in the future. And what that means is that you'll be able to feed this account with time. So I would say take this 15,000 you have, could be 10,000, I don't know what your sum is, it could be 5,000, and just put it into something that's long term and just pretend that that money's almost gone. If you want to really, trade quickly and trade more, well, then you could take the approach of getting multiple brokers. But eventually, usually, with age, your income should typically go up depending on if what kind of job you have, what kind of business you have. Typically, it should slowly start to rise. And with time, you can feed and funnel this little bank account and get it larger and larger. And that way, you can hit your $25,000 pretty quickly. But the smarter approach for securing yourself is to always have a nice baseline. And for that, having something long-term is very handy. Now, something we've been going over lately with the penny stock traders is that, remember, a huge core of your long-term investments should be with long-term investments, or a huge part of your investment should be into long-term things. That's like long-term stocks, long-term dividend ETFs, that kind of thing. Then you got medium-term, which is swing trading, and then you got spec trades. So day trading is more like speculative trading. I know it's attractive because you could go ahead and trade more often, more frequently, but it's more speculative. It's not usually with the core part of the majority of the money that most people use, right? They don't just trade. Warren Buffett doesn't just trade $50 billion every single day in and out of a position. No, a lot of it's sitting here, then it's here. So you want to allocate things accordingly. So anyway, as far as swing trading goes, you could go ahead and swing trade, hold stocks for a couple days or a couple weeks. That's a good way to kind of avoid the pattern day trader rule if you want to be more active. If you're looking for a nice solid foundation, if you don't like a lot of risk, then put it into a lot of longer term plays. Let that money grow and accumulate over the next few years through dividends and those kinds of things. And with time, you could continue to funnel more and more money into that account as you make more money from your job or other areas, businesses, entrepreneurship, those kinds of things. So all that said, hopefully that gives you a nice baseline and foundation and things to think about, because I know we have kind of a goal and we want to go after it. If we want to, have $25,000 in our account because of the day trader rule, well, in that case, we want to reach it and achieve it. But remember, core foundation, you always want to have a nice stable base. And a lot of that comes from longer term investing. And then the day trading part is the speculative part and the speculative trades. Hope that you found this video helpful and insightful. Remember, if you have a specific trading question you want me to answer, go ahead and click this link over here, go to our website and submit a question by voice, and then you can hear yourself as well, and I can answer your question in detail. But if you just want to hang out on YouTube, then hit the subscribe button here, so that way you don't miss other future videos. Thanks again. Remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.